If the United States ever stopped paying its debt, the world economy would implode in less than 48 hours. Banks would freeze, markets would vanish, and every dollar in your wallet would suddenly mean nothing. Welcome to The Financial Historian, where money, power, and history collide, and nothing is ever as simple as it looks. Because what we call U.S. debt isn't just a number on a spreadsheet, it's the foundation of modern civilization. The invisible architecture that holds up everything from your mortgage to the price of bread. And if that structure ever cracked, it wouldn't just be an American problem, it would be a global collapse of faith, the end of the financial world as we know it. But before we imagine the fall, we need to understand how we built this tower in the first place, and why the richest nation in history is also the most indebted one. It started in 1790, when a young nation fresh from revolution was drowning in war loans. The new United States owed money to soldiers, citizens, and foreign allies. Most countries would have defaulted. Instead, Treasury Secretary Alexander Hamilton did something no one expected. He embraced the debt. He argued that if America could borrow and pay reliably, it would prove itself trustworthy, a safe bet in a world of broken empires. Hamilton's gamble worked. The United States began issuing bonds, promises to pay, and honoring them. Investors bought in. Confidence grew. In Europe's markets, American debt became a premium product. The new republic didn't just win its freedom through war, it financed its future through faith. That faith became the foundation of U.S. power. Every major era of growth, the railroads, the Industrial Revolution, the New Deal, World War II, was financed through borrowing. Debt wasn't a sign of weakness, it was the engine of expansion. By the mid-20th century, that engine was running the world. In 1944, with the Second World War still burning, 44 nations gathered in Bretton Woods, New Hampshire, to design a new economic order. They made a simple choice that changed history. They anchored the global financial system to the U.S. dollar and the dollar to gold. That meant every major currency now depended on America's promise. After the war, the United States held 2/3 of the world's gold reserves and half its industrial output. Confidence in the dollar was absolute. Foreign governments stored dollars as reserves, and when they wanted to invest safely, they bought U.S. Treasury bonds. The American debt became the world's savings account. But nothing built on faith stays stable forever. By the late 1960s, the U.S. was fighting an expensive war in Vietnam while funding massive domestic programs at home. Dollars were leaving the country faster than gold could back them. Other nations started demanding the metal instead of the paper. The Treasury's vaults began to drain. Then, in 1971, President Richard Nixon made the most consequential financial decision of the century. He severed the dollar's link to gold. Overnight, money was no longer tied to anything physical. Its value depended entirely on confidence and on the U.S. government's promise to keep paying its debts. That promise created what we live under today, the debt standard. Gold no longer backed the dollar. The world's trust in U.S. treasuries did. It was a quiet revolution. For the first time, the United States could create infinite credit as long as the world kept believing in it. Treasury bonds became the safest asset on earth, not because they were risk-free, but because everyone agreed to treat them that way. Banks used them as collateral. Pension funds relied on them for stability. Central banks filled their vaults with them. When you hear about the national debt, you're not hearing about a bill to be paid. You're hearing about the core infrastructure of global finance. Every loan, every derivative, every credit card interest rate sits somewhere on top of U.S. government debt. And the system depends on one simple ritual. When old bonds mature, the U.S. issues new ones. It never truly repays its debt. It just rolls it over, forever. As long as that process continues, the illusion of stability holds. But if that chain ever breaks, if the government misses even one payment, the illusion shatters instantly. Treasury bonds are the collateral that underpins the entire global banking system. A default would mean that the risk-free asset isn't risk-free anymore. Within hours, liquidity would vanish, banks would stop trusting each other. The dollar would plummet. It's happened before, on a small scale. In 1979, a processing glitch delayed Treasury payments for just a few days. Interest rates spiked immediately, and the shock lingered for years. In 2011, Congress's near failure to raise the debt ceiling caused the U.S. credit rating to be downgraded for the first time in history. Markets lost trillions in weeks, all over a political standoff. Those weren't financial crises. They were psychological ones, because the entire world economy is built on a single assumption, that the United States will always pay. That assumption has turned debt into America's most powerful export. Other nations trade goods. America trades promises. Each bond it issues becomes part of another country's reserves, another bank's safety net, another pension fund's stability. And that's the great paradox of American power. The United States doesn't need to eliminate its debt. It needs to maintain it. The rest of the world demands it. If Washington ever tried to pay everything off, it would collapse the very system that sustains it. Debt is no longer a liability, it's the product. But even the strongest faith can crack. In 2025, U.S. debt surpassed $38 trillion. The annual interest payments alone are approaching $1 trillion, nearly equal to what the country spends on defense. The government is borrowing money to pay interest on the money it already borrowed. The machine works, but it's grinding louder every year. Meanwhile, political brinkmanship has turned the debt ceiling into a hostage. Each time Congress threatens to default, investors flinch. Foreign buyers, China, Japan, Saudi Arabia, have started trimming their treasury holdings. Central banks are quietly buying gold again, and countries from Brazil to India are exploring trade systems that don't rely on the dollar at all. For the first time in half a century, the world's faith in U.S. debt is showing cracks. Not because America lacks money, but because it lacks consensus. And when trust is the only thing holding up the system, politics becomes the real risk. Because what happens if the United States can't pay its debt isn't a question about dollars. It's a question about belief. And belief, once lost, is the one currency no government can ever borrow back. If the United States ever failed to pay its debt, it wouldn't look like a crash at first. It would look like a pause, a single missed payment, a quiet technical glitch, the kind of bureaucratic mistake that gets explained away in a press release. But behind the scenes, every algorithm, every trading desk, every central bank would feel the air shift, because the unthinkable would suddenly become real. The safest asset in the world would no longer be safe. In the first hour, markets would freeze. Treasury bonds are the backbone of global finance, the collateral that underwrites almost every loan, every trade, every derivative. If they're not guaranteed, banks can't lend, hedge funds can't borrow. The world's financial plumbing would seize instantly, stock prices would plunge, not because companies stopped making money, but because the foundation of valuation, future stability, would vanish. Then the panic would move outward. Foreign central banks that hold trillions in U.S. debt would scramble to protect themselves. The dollar would collapse as investors flee into gold, euros, or even crypto, anything that looks like certainty. Interest rates would skyrocket. Credit cards, mortgages, car loans, all would become unaffordable overnight. Within a week, the U.S. government wouldn't be able to pay soldiers, Social Security checks, or healthcare bills. Within 2, the entire global economy would be in cardiac arrest. And yet, the real story isn't about numbers. It's about faith. Because the U.S. doesn't just print money, it prints trust. And if that trust breaks, there's no central bank on earth big enough to fix it. Every empire in history has faced this moment. Rome had its denarius, Britain had its pound, and both discovered the same rule. A currency lasts only as long as people believe in the empire behind it. When that belief fades, even the strongest metal turns to dust. In America's case, the collapse wouldn't start in the streets. It would start in the data, in trading terminals, in interest rate spreads, in the quiet panic of central bankers on encrypted calls. And then it would spread to everything else. Pension funds losing value, companies missing payroll, governments cutting ties with a dollar they no longer trust. The entire global economy would begin to decouple from the United States, not out of anger, but out of survival. Some might imagine China or another power stepping in to replace the dollar, but it wouldn't happen that fast. Trust takes generations to build and moments to lose. The world wouldn't find a new reserve currency. It would enter a period of chaos where every transaction costs more because no one knows what anything is worth. That's what default really means. Not the end of money, but the end of meaning. And the irony is that this disaster wouldn't happen because America ran out of cash. It would happen because it ran out of cooperation. The U.S. could pay its bills in a second. It controls the world's printing press. But if political paralysis blocks that ability, if ideology overrides function, the result is the same as insolvency. Confidence doesn't care why the check bounced. We've already seen the early warning signs. In 2011, when Congress nearly refused to raise the debt ceiling, global markets lost trillions in days. The U.S. government's credit rating was downgraded for the first time in history, and it still hasn't fully recovered. In 2023, another standoff pushed the Treasury to the brink again, forcing emergency measures to keep the lights on. Each time the world blinked and then pretended nothing happened. But faith doesn't reset. It erodes. Meanwhile, interest payments on the debt are now approaching $1 trillion a year. That means the U.S. spends more servicing old promises than it does building new ones. The math no longer looks sustainable. And yet, the real problem isn't the debt itself, it's the complacency. The assumption that the system will always renew itself because it always has. History says otherwise. In the late stages of every empire, money stops being a tool and becomes a substitute for trust. Governments print, borrow, and spend to postpone decline until the illusion becomes too expensive to maintain. The currency weakens, inflation rises, and finally the world moves on. The United States isn't there yet, but it's walking the same road Rome once did, paved with credibility instead of silver. A U.S. default would mark the end of an era, not because the numbers stop adding up, but because the story does. For 80 years, the world has believed that the American system, its laws, its institutions, its dollar, would outlast any crisis. That belief allowed nations to trade, invest, and save in peace. If that belief dies, what replaces it won't be a new order. It'll be noise. But even if the system survives, every crisis leaves scars. Each political standoff, each downgrade, each headline about running out of money chips away at the idea that the U.S. is eternal. The next time the debt ceiling approaches, markets will remember. The next time Treasury yields spike, central banks will hedge, and slowly, quietly, the balance of power will shift away from Washington, not through revolution, but through caution. That's how empires end now. Not with invasions, but with diversification, not with collapse, but with indifference. The world won't fight the dollar, it will simply stop needing it. And so the greatest danger to the United States isn't that it defaults tomorrow. It's that every year of political games and financial excess makes the eventual loss of faith inevitable. The longer the country treats its credit like a weapon instead of a responsibility, the more that credit turns back on itself. Because once the world decides America isn't the safest borrower, the very debt that made it powerful becomes its weakness. The United States built its empire on a paradox: infinite debt backed by infinite trust. And for now, that trust still holds. Investors keep buying treasuries, the dollar still dominates trade, and markets still believe the system is too central to fail. But faith, like any currency, depreciates when overused. If the day ever comes when the U.S. truly cannot pay, whether through politics or collapse, it won't just default on its creditors, it will default on history, the promise that a nation could borrow forever, rule by confidence, and never face the reckoning every empire before it has faced. Because the truth is simple and terrifying, the world doesn't run on money, it runs on trust. And trust is the one currency no nation can print. If this gave you a new perspective, hit subscribe. History has the answers, and I'll show you where to look.